Hi there. Welcome to today's episode of Trades to Profits with Brazilian Pips Cassa. And today I'm going to talk to you about walking through how to spot an entry to the M's and W's in all the videos from part 1 and part 2. I've taught you first how to spot M formation, how to spot W formation, and I've also taught you how to identify the different variants of the M's and W's formation. So if you're not single video, you want to do so now. And if you're new to the channel, don't forget to subscribe because this is the channel where we teach you how to trade to profit and strategies that work. Only strategies that work, and these strategies are based on market structure. My name is Brazilian once again. I'm popularly known as Pips Cassa, and welcome to today's video. First off, I'm going to tell you real quick that trading market structure based on the end is short while. Now, while this strategy is very offensive, it is a strategy that requires patience. Patience in that there are times when you wait for the right opportunity to trade, wait for the setup to ready. Take this for example, which is spring is very gigantic. W in the making. So this W is just about to fall. Now some traders say, okay, since I know that this is going to be sell, why don't I just sell it? I always tell you that as far as trading goes, every decision you make is something that you want to make that decision solely or if you're choosing to sell at this point, there is nothing wrong with this. Actually sell it now. Okay. You can see this on the daily time frame. Drop down to the lower time frame, say 10 days of thereabout. See that this is typically a triple top, right? Okay, the first top, second top, third, and that's the neck right there. So the person says, why don't I catch itself at this point, sell it down, seeing that this has not been able to take out the zone, there's been considerable amounts of consolidation going around here, and price has been tempting to take out the zone because to see this one is open Thursday, right? So you're like, market has been trying to take this out, but why don't I just join itself out? That will not be bad itself because you could be riding all this, right? So, like I said, every good decision you make in the market, first off, before you make the decision and take all of the trades, you must have a very good, firm grasp of market structures. You already have that. So you take this and stop those right up 25, that's fine. But the general overall direction of this market is the bullish market. That's one of my favorite things. It's got a lot of volatility and the reward is quite high. I love trading. Right, so I'm going to wait for this market to get to this point right now. Why? Because I love. Personally, it's a preference, right? Like I said, every decision you make in this market, so you make a decision. The only time you will begin to wait for spring to direct you while you're still learning. That's one of the things the service I provide for my students. I always make sure that I guide them and I mentor them as best as I can and as best as they need to their firm not make their decision. Rental or guidance kind of thing, right? So while they're learning, give them all the guidance, all the training, everything they need to make their own introduction, much like training the child, right? To teach that child everything. This is wrong, right? Do this, do this, do that, get that. Avoid this, also show that child everything. Now when the child gets to the adult, say 18 or thereabouts, you expect the child to make their own decision. That's principle also applies here in this market. So proposing my students, I give them all the guidelines, all the guidance, all the mentorship that they need to make money trading. And most of them go on to create their own strategy, to create their own, everything, and make their own decisions. You will also get to that point where you will begin to make your decision. That's why it's very important that you get the 17-part video so you get access to my mentorship, alright? So personally, I won't take the trade. I won't sell it or rather wait to take the buy. Why? Because the market is in general overall buy direction. So that will be better opportunity. Wait to take the buy. My students always ask, why wait rather than sell it? I told them, like I said, like I just also told you, you can do so, right? So you can write it down to this point, take the sell. This is quite a lot of tips right here. So taking the sell, good. Taking the buy, obviously, the profitable for me, right? So that's good. So waiting to see this set of price technology, take it, will guide you into profit. Now, some guys will now say, I want to see it break this point, and they want to break the buy, and it breaks this and you jump for a buy, and then the market is right now. But you are not dumb money. You don't trade like that because you've already seen the whole picture from the part one to part two. So you've already seen the whole shape, the whole dimension, everything about the market, everything that this kind of sell market, selling in case of trend. So your stop loss is very tight, not going to go beyond because it's at 15 pips, right? Another strategy some of my students came up with is that they'll wait to see that these market makers, you guys that drive right, breaks the zone. Sometimes you do so why because there are a lot of sellers that are targeting to sell here, right? Because there are lots of sellers here, so they're waiting for to get enough volume. Let them know themselves. So people have jumped in at this, right? People are in now. So they're in between profit and loss, profit and loss, profit and loss. And they all have the stop losses there. So these guys can drive price, hit all the stop losses, and then pin it down. So what most of my students do is wait for that move to happen before they take it sell. So all of these consolidations, they're not even I just showed you strategy. So it's all about strategy. Once you know what you're doing, you know how to create a strategy. All of these are mentoring that you get from my or purchasing myself to buy, right? So that's one thing you personally always do this. So now we just talked about one entry strategy. Alright, seeing price break out of this, these all the stop losses and all the dumb money that the smart money gets in at that point, ride it all the way down to this point. And then when they're done riding down to this point, taking their profit, they now begin to look for buy opportunities. Now, from this point, they don't just jump in for a buy. So that's dumb money. Dumb money will say, oh, I've already seen that this is the dumb money, this is the second one, so I'm jump in. That's dumb money. Smart money will do that. Smart money will wait for the opportunity to present itself and see that the market is ripe enough to take it. So like did here or like smart money did here, they will wait to see how these guys will react. Why? Because there are lots of buyers here. This is the buyer zone. Same way as this is seller zone. This is buyer zone. There are lots of buyers here. People waiting to see that the market or price is moving up. So they're waiting here. Of course, they all have their stop losses 25, 30 pips below that point. So these guys can see all this, right? Not they know that this is John or Mary, but they see that there are lots of volumes here. So they always try to drive. They don't do that like wonderful. Most of the time, do so, correct? Do that. So that's what's called market sentiment. So knowing that, okay, the majority is going for buy, the majority is going for sell. That's why some traders tell you, don't trade the popular strategy. The trade popular strategies. These guys know popular strategies. You know that they're not following that direction. They call it sheeps. They follow that direction. Ooh. And they know that's supposed to be forward. So you don't want to trade. You don't want to be proud. You want to be over the radar distance, right? So that's you making sure that you don't just jump in. So that's strategy number 2 on spotting an entry. The market gets to this point, don't jump in. You want to see the things you need to see at that point so you can see that it's a trade. And one of those things is based on the candlestick formation. I think I did a video on spotting the candlestick formation. Candlestick pattern, the signal buy. The candlestick pattern, the signal sell. If you've not seen the video, go check it out. And if not, let me know in the comment section. Right? So as a way of brush through, let me just walk you through some of the candlestick patterns that you like to find at this point. Remember, some still right out down to this point. Let's try it. When the buy gets here, two ways. Either way to see them hit the stop losses, which they often do with a pin bar, right? See them pin it down and then push it all the way back up. That's the pin bar right there. Right? That's a legit major strategy. So the way that pin bar appears, it shows that the stop losses have been hit. And then they've driven price up. So that's a good opportunity to take the trade. So here's what we'll do at that point. One candlestick formation with the trade. Another information that you want to see there is the very track. That's the very track. So you see this guy drive price all the way down, very, very big sell cancel, and then something will happen next. The buy candle follows immediately. The buy candle is doing over the equal length with the sell cancel. That's a bullish very track. So that's another signal. Taking a buy with that just simply tells you that the deal is done, alright? These guys have done what they want to do. Now they're ready to allow the market to go. They've done all the dumb money businesses. Now they want smart money to go. So this is how you make money trading, alright? This video is titled Make Money Trading. This is how you make money trading. Making money trading mostly you waiting for the opportunity to arrive. You don't jump in for like your body shaking right. There's no body shaking here, like there's no anxiety. The market is a game of calculation. The market don't say now. You have to be very calculated, very patient, very methodical. So you're able to do all of this. We'll get to the point of trading smart. Alright. So I just taught you two ways, I think three ways that you can now explore. This entry strategy can also be applied to their information, right? Whenever trying to get top information, their information and sell direction or by direction, right? So these two things, the pin bars and the rows, they are major kind of information that some people say, what about the position ball? That also is seen as sell and then something with a classic bullish candle like that. That's really good. That's just this point forward, right? That's how we're going to come to the end of this class today. You just learned how to make money trading the ends of numbers. So you learned how to spot them, learn different variants. Today you learned how to make money trading them, right? So go try out this strategy, and if you thought this all trading strategy, let me know in the comment section. Send an email to Forex@gmail.com. I'm also on Instagram as a Tracy Perfect. All the links for you to connect with me are all in the description section. Be sure to check out the description section. Don't forget to like, share, and share your thoughts in the comments section. Thank you for watching. I'll see you next time. This is the channel